When you come in and you have declining sequential growth, you have a problem. Hey everyone, welcome to another edition of Top 10 Stocks to Watch for the Week. Now, the majority of them today, frankly, are going to be shorts. We will have some longs, and let's just jump right into it. So, first one is Square, and I know a lot of people are going to look at this and they're going to say, well, why Square? Because we're already down so much. Well, the reason behind it is not only the sequential decrease in quarter versus quarter growth, and that's important to note because we're seeing a lot of that. Stocks that have had sequential growth declines quarter versus quarter, and you can see that pretty similarly with Block at 266% to 143 to 27% to where actually this year they're predicted to not grow at all. They're actually predicted to be down -2%. That's not what we want to see out of our growth companies, and this is paying the price for it. Now the question is, what do we do about it? Well, this is very simple. For us, and you see how you're just in this channel, all we're looking for are key levels here. Now you can see how these averages are pointing down. You're heading right into earnings. My goal is to try and get up and in this before the release of earnings as a short. Now, how are we going to do that? Well, we really don't need the moving averages. We can see very clearly here how we can't even get above the 21-day. But what is important about today is this: we could not get back above that 100 line. We've been able to get back above that 100 line, and we were unable to get above that 100 line. And that's really important to understand. Now, the reason that's important is because that's utilized very simply as a level that we're all looking at going, okay, that's mental. It's a triple-digit stock. Well, it's not a triple-digit stock anymore. Now, if we sit here and take a look at these levels, you can see where your next level of support is. You don't have anything till here. So that's going to be an issue for us right here, right? So you don't have anything till $87, and I think that's where you're heading. Now, whether or not you get there before earnings, I don't know. But this is a really very simple trade, and if you look at this on the monthly, you can just actually see just the straight carnage and selling down. And just note this, because it's really somewhat staggering. This was where you stopped before, and you went right through it this month. That leads me to believe that we're going to have to go to another support line, and that starts right about here. And that puts you at 83, 84 on the monthly. But all we're looking for to get in this trade, again, get in and up, and then we'll see how we do with earnings. But you need to watch this level, and you want to watch 96.83. Watch 96.83, see how we react to that, a break of that level, and this could go. This is a very similar pattern. If you followed the top 5 at 5 or joined any of the pre-market live shows, this pattern's very similar to what we saw with RBLX or SHOP this week. One of the questions I'm asked a lot is, how do I pick stocks, scanners? Well, one scanner that I use is I will review every index at the end of the day, every sector in every index, and I will look for something that stands out. That's how I do it. Now, that led us to MATX today, and I'll explain why. First and foremost, it's in the shipping index. If you want to see the strongest moves, you can go through them and then go through that index and then find that move. Now, see this enormous move? See how we held that 50-day right here? What's fascinating about this is this number, 939. Let's go through their earnings. They've never had a quarter like this in years. And that's really important because you want to go through these and you want to see where you stand and then how you react to them, right? You can see that on the monthly right here pretty clearly, how you react to those earnings. They're all marked by this date. But if you take a look at this and how we responded to it, we responded extremely favorably in an extremely tough tape today. And that's what you're looking for. You're looking for relative strength. You're always looking for relative strength. So this provides us an opportunity. Very, very simple trade, and I'm going to walk you through it. We're going to note this level right here. We're going to note how we got above it, how it acted like support and resistance, that 94.59 level. We wouldn't want to close below that. But they really lined this trade up almost perfectly for us. You can see that 101.72 here on the monthly. Go to the weekly. See that 101.72? We're going to have to watch that level, but watch this. If you come straight across here and you look at these levels, right here, 99.19, and then you're right here at 99.13. So really what you're looking for is 99.20. That's what you really want to say. I'll leave it there at 41, but you're looking for 99.20. That's the number that we want to get to. Then watch this 101.72. But if you get above that in this kind of market, you're going to see some people step up here and get involved. This has been basing for some time. There's a huge channel right here, and this could continue to move. But again, we want to get through, and then we want to watch how we act at that level. We're fully aware of the type of environment we're in right now and how hard it is to actually trade. Speaking of that, at the end of this video, you might want to hang around because at the very end, I'm going to do the Qs and the SPY, and we're going to talk about the indexes for a little bit. I think that would be a good idea considering what's going on out there. Now, LABD, this is a 3X ETF bear fund of the biotech industry. This was one we had in the top 5 and 5 last night, but I don't think that this moves over. Frankly, I just think it's starting. This is where we were talking about getting above that 40.57 level. Once you get above that, you're above what? You're above that 21 day. We use simple moving averages. You should use what you find most comfortable. Once you get above that, now we're here. I don't know that you have to wait for you to get above this to be involved. Let me just show you another level that I like here. If you come and take a look straight across, 41.87. 41.87 is the level that you really want to watch. Just get up and over this again, and I think you'll go this time. If we see weakness in the Qs, which you very well could, if we see that in the NASDAQ, this is going to continue to move. This is actually forming a cup. If you take a look at it, you had a nice little wedge down. You had to get over the higher high. That's exactly what you did here. Then you popped over the 21. Let's get rid of these lines for a moment. See how you popped over that 21? See you got over this higher high right here? That's confirmation that this channel is now in play. And if by that, what I'm talking about is right here. So you have this channel, right? It's not the best channel, but here it is. And there's another portion of a smaller one, obviously, and we can see that right here. But once you flip that channel and break that channel, you must get over a higher high. By getting over that higher high, that confirms the move. That's exactly what we did here. Right? All we're looking at is technicals. So you can see that. Now you've done that, overlay this with it, boom. And you can see how you broke out here and now you're heading up here. But I don't know that you have to wait that dollar. And I'm not sure that I would. What I would do is just look for getting over this, which they're saying 41.90. So call it 41.95. Use 41.95. I see no reason that if this gets ugly, which it can, why this can't go back to $55. You know, this was a lot higher before, obviously, with moves like this, and we all know how these bear ETFs go. But I do think that there could be a 20-25% move here, and you can see that fairly easily just from this. Now, if this gets even worse, you could see it even greater. You could see something a lot higher. But you're going to have to see. I think there's at least 20-25%. I'd love to see it clear this and get us closer to that 30 level, but we're going to have to watch and see. Now, this long term I like, and I want to be clear about this. We're looking short term technically on what's going on in the world. We're all aware of the Russian-Ukraine tensions. We're all aware of what type of effect that's having on the market. That's why at the end of this video, we're going to go through the indexes so we can look at some key levels and make some informed decisions. But if you look at ARK right here, this is setting up to break, and this is a very clear break. I don't care what this is called. I'm just talking about the technicals. Now, she's in all the wrong names. We know that right now. And I just want to point this out right here. See this line right here, this wedge line? Okay, you want to clone these, and by cloning them, what that will do is that'll tell us the true trajectory of what we're dealing with. Now, once they're cloned, you see if they fit in and how clean they fit in. Let's get rid of these indicators. And we can see the channel that we're in. So now what we want to do is just look at this and go, all right, well, where would that take us to? Well, that could take us down here. Well, how realistic is it that we get down to this 50 level? Well, I'm in this channel. Okay, so now we understand where we're at in the channel. What would the count be? Well, this is easy to do a count with because here you have a little bit of a left shoulder, you have a head, and you have a right shoulder, and you just broke a neckline. Right? So you can have mini head and shoulders and major head and shoulders, okay? And that's what you have right here. Now, what does that do for us? Well, this real simple calculation. If I go to the top of this and I go to the neckline, let's go down to where we broke, okay? And let's call this the area. That puts us at 18%. This whole thing encompasses 18%. Our trigger is going to be when we break right here, right? So basically, if you're looking for your trigger, it's right here at 64.35, roughly. $64 we're just going to call it. You break $64, it's game on. So that's the level you want to look at. Now you come here and you put 18% in because you want to go by percentages, not just by numbers. And that gets me to right around here. And that would get me right to the lower end of that channel right now. So that's very realistic to do. If you put a line right here and you come across, okay, you can see that you have some support in this area that we're talking about. And again, we're looking at areas. But you can see you have some support in that area that we're talking about right here. So I would watch this, but if you break 64, I think that this is game on. Now the indicators are pointing down. She is in the wrong names right now. WA growth is getting crushed. And this is probably going to continue, but by the way that this is looking, even geopolitically, if this stuff gets solved, there's so much damage to these charts now that they have to base first. If you know how to count your charts and what to look at, very clear what type of stage you're in here, right? You can see that this is a stage 3, this is a stage 4. It's pretty clear what's going on right here, right now. And if you take the flip side of that and you look at this, again, this was another one we had. Look at this break here, straight across, and we broke out today. This was one of the levels we were looking at. We were actually just looking for the higher high to get involved. We actually did this in the trading room, did quite well with it. We also shorted Arete, but I think there's a longer trade there. Now, you're going to want to watch this 51.25, but it's important to note a couple things. This SARK is a bear ETF of ARKK. Please keep that in mind. Now, what you're going to see here is you're going to see that 50.72 level, that's where we closed. We've only had one other close higher than that, and that's what we want to watch. And that was this bar right here, closing at 51.65. So what we want to do is get over 51.25, we're going to call it. If we get in there and start working off these wicks, we can get up here fairly quickly. Now, if you can get up there, just to put this in perspective, you have this whole channel right here, all right? And that would get us up and in. And let's just take a look at that and see what that would yield. So there you're looking at roughly 15%, we'll call it. And of course it's greater as it takes longer to get up there. But I think that's very doable. And I would just look for that little level we just talked about and go from there. Now, Melly's another example of a stock that is having a decline in sequential growth. And when you see these declines in sequential growth, you need to get out of the way. Now, we've seen this happen earlier, and we talked about this again. This one was in the top 5 and 5 last night as well. There's a larger move going on here sequentially that you need to look at. When you come in and you have declining sequential growth, you have a problem. And you don't get growth buyers anymore. And what happened, and we saw this with SHOP, you know, for those that are in the trading room or followed along this week, we were all over this, and I still think that we can get down to this 541 level, but this one has way more meat on the bone right now, and there's a couple things that are going on with it. Okay, we have earnings coming up. I don't see for the life of me, if you looked at the earnings that have come out for SHOP and some of these other competitors, I don't see for the life of me how they're going to have good earnings. Now, whether you play this into earnings or don't, that's up to you, but if we could get up and in this trade enough before earnings, you may be able to capture a major move. And that's really what you're trying to do. You're trying to put yourself and you're always trying to position yourself, right? You're always trying to position yourself. I can't stress that enough. Your goal as a trader is to get up and in trades and then try to stay in the position for the majority of the move. You want to position yourself for success. I can't stress it enough. I see too many people so scared that they just take their profit real quick. And that's fine, but then when you take your losses and your losses are greater, we all know that that doesn't work out very well. But what we're going to do is just look at this 959.87. We're going to look at how we broke it. Now, we're looking at these bars, open near the high, closes at the low. Opens at the high, closes at the low. That tells you everything you need to know about this move. Everything. And if you don't want to short $1,000 stock, just use at the money weekly puts. That they'll work just as well. And you might even get a higher percentage return doing something like that. But where could you go? Well, there's a gap right here. This up to that. I don't see any reason why you can't get down here to the 740 level. When this starts to break, I mean, if you were at 2,000 and I told you were going to 1,500, you would have told me I was crazy. And based upon this move, very similar, right? So it's very doable that this can happen. And all we're looking for is this little break, 936.70. And after that break, that 936.70 break, that's it. If you close over this line I just gave you, 959.87, that's what you want to use as your stop. Now, it's important you comment on these videos and let me know what else you want to see as far as content, because I am making them based upon what you're asking for. So I got asked a lot about, show me where the stop would be, talk to me about the targets, and that's why I'm starting to do more of that. So I think it's pertinent for everybody to comment. That, especially if there's something in particular that you're looking for. Now, we all know the market and we all know what's going on right now. What we're looking for are outliners that have absolutely nothing to do with what's going on in the market as far as geopolitical events or interest rates. If we can find anomalies, which we just showed you one with MATX, But if we can find anomalies in the market that just simply don't care what's going on, that's what we want to do. And Amlx is one of those. Now, Amlx is recently named to Goldman Sachs's top buy list. And I don't say that lightly, and very rarely do I get into fundamentals, but again, I was asked to in the comments, so I'm starting to do more of it. They have an Alzheimer's drug, and they're slated this week to start meeting with the FDA. Now, this actually got pushed up from the June 29th date to March 30th. And there seems to be a lot of comments about how great this is. If you look at what Goldman had to say about it, we believe that Amlx Pharmaceuticals is positioned for a successful commercial launch in ALS. As the company's lead drug candidate, Amlx0035 is the first agent to have demonstrated a benefit on both function and survival in patients with ALS. Based on the data observed today, including the drug's safety, given the unmet physical need, we see a high likelihood of approval. Further, we expect Amlx0035 to quickly capture significant market share and a $36 target price. Now, why is this important? For those that don't follow the market and don't understand the analysts, Goldman, like other investment banks and like hedge funds, they hire doctors. They hire teams of doctors and researchers to go over this, and they pay them significant amounts of money to do so. So it's kind of rare for them to go out on a limb and state this. Now, where does that put us? That puts us here, and that puts us off this 24.5. But as I like to say, maybe we could drill down into this and use a smaller time frame and see if we could find a better entry. Now you can see these right here, these moving averages. Look at the spike that we're seeing right here. Now let's go and take a look at an hourly and see if that can give us a better idea of what's going on. And it does. So here we are in the hourly, and you see this long green bar, okay? We can see that if you bought today, then for the rest of the day, just kind of went sideways. But what's important to note is you held that 24.50 all day long, forming this huge flag. So now knowing that this is an hourly break, all of a sudden, all we have to do is use this 26.71, use this for 24.50, and then let the trade play out and see how it goes. But I do like this a lot, and I do think that this will grind higher. I think $36 is an understatement to where this can go if the drug works out, but you're taking binary risk, and right now we're just looking for trades. Now, Tesla, this is not looking great at all. A matter of fact, I want to just point something out. We're seeing this on a lot of the leaders. You are getting right to the 21-day and you are just rejecting completely. That is not what we want to see. And we're going to go over this when we talk about the indexes in a bit. But you see how you got right to that level and you rejected, bonk, 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 right? And now you're rolling. And I'm using the 8. We all know we're below the 5s at this point. But now the fact that you're here, that's interesting, right? Because you're like, oh, well, this will hold the 200-day. Well, let's just walk through a couple things before we start saying that we're going to hold that. First and foremost, you're just being completely and utterly walked down on the weekly. Now, out of that being walked down, this bar is basically a gravestone on the weekly. It's not perfect. It's not all the way down here, but you're basically a gravestone. So let's see if there's a level here that we could look at and try to get an understanding of what's going on. And there is. This is that breakout. And then we're up here. Then you have this little pattern. You can see this wedge right here, right? And now here you are down. And now you have the 8, right, week and the 21 week crossing. Okay, so now you're coming down here and we can all see this kind of bear flag pattern, and we're below this level. So we would probably want to say that this would be our stop. Now, all I would look for, I would not even wait, frankly. If I wanted to get this short off, what I would be using is I would use the close. So the close is 856.43. You had options that expired today. If you see a level where you break through that 856.43, I would consider putting the trade on because this is your stop, right? Right up here, as we just talked about on the weekly. I don't see how you're going to hold this if the NASDAQ breaks. I really don't. You could put yourself in a position, you're going to have to look at what happens over the weekend with this 3-day weekend, but you could put yourself in a position that you hold here if there's some geopolitical news, but there's so much damage done. I don't see how we're going to hold here without at least blowing through this for another retest and maybe an undercut of here to 794, which there is some support at But more importantly, if we just kind of look at this level here, there's more support at 780 than anywhere else. But you could hold here, but it'd be great to undercut this anyway, retest, and then build and go higher. But I would use the level that I just gave you, which is the close, 856.43. That's the level that I would use. Now, make sure you subscribe to this channel and click all notifications. I put out videos every single day, private videos that go out to the community. So they're in the community tab, but they also appear in your YouTube feed. And what's important about that is that when you're going through it, you'll actually see the videos. You can click on them. They're 1 to 2 minute videos, and something that I would definitely sign up for. Like today, we nailed the NASDAQ pretty clearly on the levels and the SPY on the levels pretty clearly. So I would recommend that you subscribe to the channel. Now, bookings. This is something we were in from the newsletter. For those that subscribe to the newsletter, great. There's a link in the description for this. And if you click on the logo at the end, you can just sign up for free to get the free version. Now, here you are. Why would I look at this? Well, let's just say that everything goes well geopolitically. Interest rates are not going to affect travel, not for the majority. All I'm looking for is to get over 2640. We have a saying, first mouse gets the trap, second mouse gets the cheese. So we got through once, comes back down, holds the 8-day. Again, what are we looking for? Relative strength. What do we always look for? Relative strength versus the market. Are the markets up over the 8-day, 2150 and 200 right now? No, they are not. So this tells us that this is something very strong. Out of corrections come new leaders. I firmly believe that we're going to lean into travel, barring a complete geopolitical meltdown. And I like this. 2639, get over that. Watch the 2687 level. Let's talk about this on a monthly. See this upper channel? For those that have been following me for some time, you'll recognize this pattern. This is worth the risk. When you break these upper channels, you can go parabolic. That's what you're looking for, a parabolic move. Now, that can get you to 3,000 fairly quickly. And I think this has the potential. We don't care about interest rates as much with the sector. We care more about what's going on geopolitically. Speaking of that, this is one that we were in a little earlier. The first time that we were looking at this was roughly 480, and it's back, and I'm gonna explain why it's back. So this is a royalty trust, and they're based in, let me move this up for a moment, they're based in this bay in Alaska. About 17% of all profits go through this trust, and they get a dividend. That dividend last quarter was 10%, a quarterly dividend 10%. If you annualized it out, it was over 40%. People are starting to realize that from where the oil is coming from and how the oil price has raised, that this dividend is going to be huge again this quarter. So again, I would think that where oil is even higher than it was before, you're looking at least getting the same 60-cent dividend, if not more. Now, what does this mean? Well, that means you have demand for this. Not only that, but it also puts you in the right space, which is energy. Just look at this. Look how perfect that is. And what are we above? The 200, we're above the 50, you're above the 21, and you're above the 8. You're above everything that you need to be above. That's exactly what you're looking for here. And what we want to do is we want to focus on that. So all we're looking to do is get above this doji. That's it. 965. If you break below the doji, you're out. And what does that put you? 904. 65 cents of risk to see if you can get up and over this. And if we have more tension geopolitically, oil and energy are just going to continue to grind higher. They're going to have to, because you're going to be dealing with supply chain issues. You're going to be dealing with gas and natural gas supply issues. To think that it won't be weaponized is just frankly delusional. It most certainly will. Now, let's get into the indexes very quickly here. I want people to understand what's going on. So I posted this on Twitter. And if you don't follow me on Twitter, you may want to, because I do post a lot of actionable ideas. But see this? I posted this on Twitter, and I got rid of all of this, and I didn't put the Qs on there. And I said, would you buy this? And the answer, frankly, is no. You could not want to buy this. You might have looked at it last week and thought you had a chance to hold, but this very clear, there's no chance, right? We know that we have a really good chance of coming down to here. We had to hold that 343 level today. We were unable to do that. If you look at the Qs and the levels that you're breaking now, you're starting to break necklines. Now, this is a clear break and a lower low of that neckline. This is the lowest close we have had on this index since June. Now, what does that mean for us? I don't see how we're not getting here. I really don't. We could settle things over the weekend geopolitically. Russia could come out and make a statement. Russia is making a statement on the 20th. They've come out and stated that. That could rally us Tuesday. I don't know that that's going to be enough without us undercutting this first and shaking everybody out. I'm not so sure. Now, and I do think we're getting to that point where this may slow down, but picking this bottom right now with what's going on geopolitically, interest rate wise, very touchy. And I'm not so sure you want to be that person. So watch that level I just gave you. It's really important. Again, this is why I was leaning towards shorting Tesla. See how you're arcing straight down here? When you got to that 21 day, let's clean all this off for a moment, because I just want to point this out. And the 21 day determines who's in charge. Real simple way to think of the 21 day is if you're above it, the bears are in charge. If you're below it, if you're above it, the bulls are in charge. If you're below it, the bears are in charge. Well, since this, it's been pretty clear. The bears are in charge, right? We've had this nice little rally back here in February, but since then, this has just been torturous, right? Every little rally you think we're going to go, and then we don't. And that's the game right now. Now you have this enormous H that we just showed you, right? Now, if you look at the monthly, it doesn't look that bad. But if you look at the weekly, you have this H. So you're going to have to watch this 334.68. Let's do the SPY. And let's talk about the S&P. That's the weekly. Does not look that bad, and it's hanging in there, and that's because it's more diversified. A matter of fact, you're not getting anywhere near down here. So I can see this starting to build and starting to hold. Watch this level, 431.83. Just watch this, but I like this a lot more. This is showing stability where the Qs are not. And if you look at inflows today, and I do watch inflows, you'll see that you had more inflows into the S&P, IWM than you've had into the Qs. The Qs are really taking it on the chin right now. Now, this is very travel laden. Here's the 21 day, but look at this. Okay. You still have to get all the way up here, but you're not making those lower lows. Okay. The ones that are making those lower lows are here, and that's going to make all the difference. You really got to understand that. Like the fact that you undercut this today on the Qs and that you undercut it here, and that you didn't undercut it here. Remember what the first one was to break was IWM, the Russell. So usually when you go through something like this, the first one to turn is small caps. So keep that in mind. Also, watch your levels and be extremely particular about where you're buying and use tight stops in this kind of environment. Also, share this video with somebody. This is a really trying time. Very rarely do I ask you to share these and put them on your social media. But people need to understand just how dangerous what we're dealing with right now is. And I just don't know that people are getting it. When you have an H like this kind of pattern, you really need to pay attention because this can get ugly a lot faster than people think it can. Everybody have a great weekend.